Hello, everyone. Welcome to today's webinar, COVID-19 Tax Relief Provisions, hosted by the National Association of Landscape Professionals. The webinar today will be presented by Lisa Heller, Tax Services Senior Manager with RSM. Lisa has over 20 years of experience in tax planning and compliance for tax-exempt organizations. My name is Amy Easterday, and I will be the moderator. Before we begin, I would like to share a few tips. First, we encourage you to ask questions. To do this, please use the Q&A button and send your question in. If for any reason we cannot get to your question during the webinar, we will make sure it's answered as soon as possible. The audience will be muted for this webinar. Today's webinar is being recorded, and NALP members will have access for future viewing. And now I turn it over to Lisa.
Hi, everyone. Thanks, Amy. Thanks for that kind introduction. Welcome, everybody, to today's webinar on COVID-19 tax relief provisions for individuals and companies. May I have the next slide, please? Okay, and may I have the next slide, please? Thank you very much. My name is Lisa Heller. I'm a senior manager with RSM in Washington, D.C., and I specialize in tax services. I work directly with the National Association of Landscape Professionals, but I have a background in general, individual, and business tax. And there have been many provisions that have come out over the last 6 weeks or so with respect to COVID-19 related tax relief provisions. It seems like there's something new coming out maybe every day, sometimes even every hour. And so I'm going to do my best to present you with the most current relevant information for you and your businesses relative to this quickly changing environment. I actually hope that this presentation is still current by the time I'm done giving it. That's how quickly and how frequently new guidance has been coming out on these topics. Now, before I start, I just wanted to let you know that while I am presenting this tax relief information in broad strokes, this is not a substitute for actual tax advice. You know your business and your situation significantly better than I do, and while the information that I present could potentially be very helpful and useful to you moving forward, and I hope it is, I advise that you check with your tax professional, your tax advisor, your lender, your lawyer as appropriate to see what, if any, of this guidance could apply to you and your business going forward. So that's the weasel words section of this presentation. And let's get started. Today okay, could I have the last slide, please? Just want to walk through the agenda very quickly. I have a few top-level topics that I'm going to get into in further detail with you today. The first has to do with the change in the filing deadlines for 2019 tax returns, both federal and state. Then some new policy and legislation that has come out relative to the COVID-19 crisis. Specific changes impacting individuals, investors, and small business owners, and also liquidity provisions. That is some cashback opportunities and also some loan and forgivable loan opportunities that have come out recently as a result. I'll mention all of this to you and hopefully give you enough information that you can figure out what might apply to you moving forward. May I have the next slide, please? Okay, so you may have heard that as a result of the COVID-19 crisis, a lot of federal tax deadlines have been postponed. Really starting around March 11th or so, when people started to realize that COVID-19 was extremely serious and here to stay, and the best way to kind of keep this crisis at bay was extreme social distancing and keeping people out of crowding situations. That was right about the time that the tax season really started ramping up for taxpayers and also for the taxpayer professionals like me. There actually was a filing deadline on March 15th for certain partnerships and corporations. That deadline was not postponed, but since then, IRS service centers have closed down. There was a few essential people in there, but there really isn't anybody there, say, to open the mail, process paper file tax returns, process other notices and correspondences. And there's a lot of mail that is currently sitting at IRS, I'm sure, just being, I'm told they're actually being piled up in trailers over there, and then when it's safe for people to return to work on an as usual basis, those that mail will get opened and sorted in a matter of course. So what does this mean in terms of actually filing your taxes for the 2019 tax year? There have been a few notices and guidance that have addressed this, because IRS cannot do anything in a way that is quick and easy and streamlined. There have actually been a few notices in rapid succession to address how to make sure people's taxes are filed and any balances are paid and considered in a timely manner in consideration of the crisis at hand. Bottom line is that any income tax return that was due to IRS between April 1st and July 15th is now due on July 15th. There's been a blanket postponement of pretty much every income and information return that was due to IRS during this time period. And this is true whether that was in April 15th through July 15th was an initial deadline or an extended deadline. So let's say you had a September year end. Okay, some organizations do use a fiscal year end, and so the deadline to file your tax return was going to be June 15th. Now you have until July 15th to file. In addition, there has been a blanket postponement of time to pay any tax balances that were due during that time frame. So this is a very generous blanket postponement. They're really trying to be as gentle as possible on people during this crisis in terms of meeting their obligation without killing anybody, literally or figuratively, to make this happen. So many key deadlines have been extended both for businesses and for individuals. What I do recommend, though, is if you have a tax return to file and you're expecting a refund, go ahead and file that return now. Assuming it can be filed electronically, go ahead and file that return now, because IRS is processing refund applications. Now, it's just a matter of if you owe tax, it would be smart to hold that money and pay it when it's actually due. So may I have the next slide, please? So that is a blanket postponement of the deadline to file your federal tax returns, and that would be, your 1040s, your 1120 if you're a corporation, your 1065 if you're a partnership or an LLC, for example. Many states, most states actually, have considered what the federal postponement has done, and they have either decided to follow federal in terms of the filing deadline, or at the very least set their own guidelines for a postponement of a filing deadline. But you do need to be careful with that, because many states, but not every state, has decided to conform with the federal postponement. For example, I work out of Washington, D.C., and so the jurisdictions I deal with most frequently are D.C., Maryland, and Virginia. D.C. and Maryland have both decided to postpone their filing deadline to July 15th and to postpone the payment deadline to July 15th, but Virginia has not. Virginia has only postponed the filing deadline and payment deadline to June 1st, for example. And so don't assume that because there's been a federal postponement that your state postponement is going to be exactly the same. In fact, Mississippi only postponed until May 15th, so that's the end of this week, for example. So don't assume that your state is necessarily going to follow what IRS is doing. Please check with your tax advisor and make sure that you're getting done everything you need to be done and considering and having filed timely. At the bottom of this slide here, you're going to see some underlined phrases. When you get a copy of these slides, you will see these are actually hyperlinks, live hyperlinks to additional resources on this very topic. And so you'll see, for example, an up-to-date chart on each state's filing deadlines, both for individuals and for businesses, for example. So remember that this is for income tax returns, the state equivalent of your 1040, your 1120, et cetera. Also, things to consider are sales tax filing deadlines, property tax filing deadlines. And again, that's up to the individual state and the individual jurisdiction to decide whether those tax return deadlines have also been postponed. For example, the city of Alexandria, Virginia, typically has its property tax returns due on May 1st of every year. The city of Alexandria has decided to postpone the filing deadline this year to July 1, and they've actually made those filings entirely electronically. So not only are they giving a 2-month postponement grace period due to the crisis, they are also giving people a mechanism to file it in a way so that they don't expose themselves to the illness, and so that the city's workers are not exposed with electronic filing. It's actually fairly brilliant if you think about it, and I think it's making the best of a situation to try to get stuff done as best as possible without putting people at unnecessary risk. May I have the next slide, please? And the next slide, please. So, like I mentioned before, there has been a lot of legislation over the past 6-7 weeks or so, and a lot of new policy that has come into place to try to counteract not only the economic downturn from the COVID-19 crisis, but just to help people and businesses in this particular time of need. So there's been the Families First Coronavirus Response Act and the CARES Act, which I'll talk about in more detail in a minute. But there in these acts, there is a whole slew of tax relief, refundable credits that, assuming you qualify, you can take advantage of to help provide some much needed liquidity to your businesses. May I have the next slide, please? So the Families First Coronavirus Response Act was first out of the gate. This was pretty early on, like kind of mid-March this thing came out. And what it said was that companies have to provide mandatory paid leave for certain employees who are affected by COVID-19, specifically qualified paid sick leave and qualified paid family leave. There's certain parameters that employers have to meet, and there's also dollar limits in terms of how much of these credits are available. And the way that if you do need to meet these, make these payments, then the way you apply for it is that you work it through your payroll tax filings, that you basically, when you withhold the employer portion of your Social Security tax, there's a certain amount that you can hold back and not pay to IRS in order to accommodate this qualified paid sick leave. So this is something that if you believe that you have people who are going to need to avail themselves of these new provisions, check with your payroll tax provider on how to make sure this all happens. That would be the ADP, Paychecks, Payroll Network, whoever you use to process your payroll checks and your payroll tax filings. And here's a little bit of a pro tip. Please be patient with them when you're working with them on this, because they got this information on the provisions at the same time all of the rest of us did, and they have had to recode their whole systems to change the way that payroll taxes are being withheld and paid to IRS to make sure that people are able to avail themselves of these new benefits and get the relief that they need. But there's a lot of additional responsibility on the payroll tax providers. So everybody's doing the best they can in this situation, and we're all just trying to help. There's some additional resources also in hyperlinks at the bottom of this slide should you need some additional information. May I have the next slide, please? So the next piece of legislation I'm going to talk about has gotten a lot of press. This is called the CARES Act, and there's many key tax provisions and relief provisions in the CARES Act. Not only does the CARES Act contain language for the Paycheck Protection Program, which is really the big baby of the CARES Act. That's the forgivable loans for certain small businesses that meet certain criteria and need money to help fund payroll and certain overhead expenses. We'll talk about that a little bit later, but also some very key tax provisions to help provide relief to affected taxpayers. This is actually a very big deal. I'm not going to just walk through this and list what's on the slide here, because we'll talk about each of these in turn. But what I did want to say is I'm sure you're all aware that at the end of 2017, there was a new tax law that was passed. And that's a new tax law that was very sweeping in terms of its scope, and pretty much every taxpayer was affected by it in some way. Individuals, small businesses, large businesses, charities, you name it. There was something in it for everyone, and not every provision in the new tax law was favorable. I know a lot of people who wound up paying more tax, for example, as a result of the new tax law. Not everybody got a tax break from that. And one of the things that I wasn't really happy about with the new tax law is there were a lot of provisions in there that made it harder for taxpayers to avail themselves of relief should times get rough. It made it harder, for example, to claim losses that you had incurred in the past and convert those into a favorable tax benefits. You couldn't carry back net operating losses anymore. The corporation alternative minimum tax went away, but it was replaced with an even less favorable regime, things like that. The CARES Act has a number of provisions in it that go to counter those detrimental provisions in the 2017 tax law. So this was much needed tax relief for a lot of taxpayers who all of a sudden, through no fault of their own, had their cash flow either stopped entirely or slowed just because people couldn't come to work. It's not business as usual. People have to do social distancing. People have really had to scramble to try not only to keep in line with certain governmental orders to stay at home, but also just to keep people safe and healthy as best as they can. So we'll talk about each of these key provisions in the CARES Act. May I have the next slide, please? Okay, so the first provision that I want to talk about, and maybe some of you have already seen this, is the employee retention credit. This is a credit, an actual refundable tax credit that's money back to you of the employer portion of Social Security tax for so-called qualified wages. For up to $10,000 per person. So the credit that is available is $5,000 per employee on qualified wages that are paid between March 12, 2020 and December 31, 2020. And in addition, if for some reason you're not able to make up that whole amount through employee withholdings of payroll taxes, and there's actually a way to apply to IRS to get a refundable credit in addition, so you can be made whole sooner rather than later. And the credit period is for wages paid after March 12 and before January 1st, 2021. So any wages paid in 2020 for qualified wages are potentially eligible for this credit. May I have the next slide, please? So in order to qualify for this payroll tax credit, if you were an employer that was carrying on a trade or business at any time during calendar year 2020, and this is an either-or situation, either your operations were partially or fully suspended due to an applicable governmental order limiting commerce, meetings, travel, etc. Basically, a governmentally ordered interruption in your business. Looking at you, Michigan, California, New York. Or if you can demonstrate that you experienced a 50% or greater reduction in your gross receipts during a calendar quarter in 2020 when compared to that same quarter in 2019. It's an either-or test here. Then you can qualify for this credit. Credit's also available to tax-exempt organizations. I don't know if there's any of those on the phone today, but those are not shut out from this. This credit is not just for taxable businesses. Also, to keep in mind, if you have applied for Paycheck Protection Program loans, your ability to take this credit might be limited because it is seen as double dipping. You can only take one kind of benefit on any one person's demonstrated payroll. May I have the next slide, please? Okay, so that is actually something, again, that you would work out with your payroll tax provider, because they're the ones that handle your withholdings and your payroll tax reporting. And there are actually Form 941 for 2020, which is the quarterly payroll tax form that gets filed with IRS. Those forms have been updated to reflect holdbacks for the employee retention credit. In addition to that, there's another refundable credit on employer payroll tax. So it's a sort of a credit. It's really more like a timing difference. You are able to delay actually the employer portion of the Social Security tax that you've withheld on your employees. So that 6.2% that you withhold on the employer portion, now between the end of March and the end of December, you don't have to pay it when it was due initially. Now for 2020 employer portion of FICA, now you don't have to pay it. It's actually 1/2 is payable at the end of December 2021 and 1/2 at the end of December 2022. And again, this is a program that interfaces with the Paycheck Protection Program, and it's really either one or the other. So this would be a question to work with your lender, work with your attorney potentially, and definitely work with your payroll processing company to make sure that the proper amounts of payments that have been withheld, that payments are being deferred and being paid at the proper time. Both of these payroll credit opportunities are meant to provide additional cash flow to businesses that probably do need it in this economic downturn. May I have the next slide, please? Okay, this is, 5 year of NOL carryback. NOL stands for net operating loss, and that is a tax-based business loss on any given year's tax return. It used to be before the 2017 tax law that if you had a net operating loss for tax purposes in any given year, you could either carry that loss back for 2 tax years. Let's say you lost money in 2017, but you made money and paid tax on it in 2015 and 2016. You could take that loss from 2017 and carry it back and apply it against income that was already taxed for those 2 years and get refunds for tax that you had already paid. And many states also follow those same rules. Any net operating losses that remained after carrying it back for 2 years could be carried forward for 20 subsequent tax years, and after the 20 years were up, those losses would just simply expire. The new tax law from 2017 basically eliminated carrybacks of net operating loss. So if you made money in years 1 and 2, lose money in year 3, you can't carry that loss from year 3 back to years 1 and 2. You have to hold it until a subsequent year when you make money, and then you can use that loss and only carry it forward. Now, those losses don't expire like they used to. They don't expire after 20 years. But if you made money a couple years ago and then you're losing money this year, you don't have an immediate cashback opportunity with a net operating loss carryback. This was one of the features I was talking about a few minutes ago about how the new tax law was detrimental in some cases when the economy turns bad. What the CARES Act did was it put in an emergency provision allowing net operating loss carrybacks, again, this time for 5 tax years. So this is much more generous than the old tax law had. And it's been done a couple of times in the past. The last time it was done was in result to when the economy fell out in 2008. There was a temporary provision where you could do a 5-year NOL carryback in certain situations. So now, according to the CARES Act, if your business had a net operating loss anytime between 2018 and 2020, those losses can be carried back for 5 previous tax years. So that is very generous. It really gives businesses the opportunity, if there are tax dollars sitting out there that could be refunded, this is much more generous than what had done in the past. In addition, knowing full well that a lot of IRS service centers are closed or mostly closed these days because most employees have been told not to report to work, not to open the mail, et cetera, and it'll wait till later. Businesses need their money now. And if you're filing a net operating loss carryback, IRS has actually set up a way that you can fax in these refund claims. Sometimes the refund claims can be filed electronically, sometimes they can't. It depends on the type of taxpayer and the form. But IRS has actually set up fax numbers for these particular types of tax filings to try, and I guess they're going to somebody's computer to help process the refunds, to try to get money back into the taxpayer's hands sooner rather than later. So I welcome this particular provision. I think this is potentially going to help a lot of people. And remember that you can get that money back at the original tax rates. So the tax rates were lowered as part of the 2017 Tax Act. They were higher before 2018. So the highest corporation tax rate used to be 35%. For individuals, used to be 39.6%. You can get your refunds back at the same tax rate that you paid in initially. May I have the next slide, please? Okay, so this is a very good example here. Sometimes five tax years is not the same as 5 calendar years. And that's a situation where sometimes the taxpayer will change their tax year end for some reason. You used to have a calendar and now you're using a fiscal, or vice versa. And if that 5 tax years includes a short tax year, then that short tax year is included in the 5 years available for net operating loss carryback. So that's something important to consider if that's something that's happened in the life of your business. May I have the next slide, please? Okay, so a few other net operating loss related considerations. The first couple of bullet points here relate to foreign source operations and foreign income. If you have questions about that, we can talk about it offline. Also keep in mind that there are certain other business deductions that interface with the net operating loss deduction. So for example, if you make charitable contributions out of your company and you take a tax deduction for that, and then you take a net operating loss and you carry it back, that might impact your charitable contribution deduction that you could take from those previous tax years. So that's just something to work with your tax preparer and your tax advisor on to make sure that your carryback is being calculated correctly and that all of the correct the deductions are being calculated correctly as a result. In addition, there are certain opportunities that you may want to take advantage of at this time to make sure that you're maximizing your the refunds that you can get with your net operating loss carrybacks. May I have the next slide, please? Okay, so if you're not a corporation, which some of you may very well be, either you own your own business and you report your business income and loss on Schedule C of Form 1040, or you're structured as a partnership or an LLC, let's say, the new tax law also kind of did a number on you when it came to how to claim business losses. It used to be that if you had a business loss, you could just claim it up to the amount of the loss. And then if you had a net operating loss as an addition, you would carry it back or carry it forward. But the new tax law limited the amount of business loss that could be claimed in a given year. It was $250,000, excuse me, for a single taxpayer, or $500,000 for married filing joint. So what it basically did is it made people pay more tax in potentially than you could have before. So now the CARES Act has suspended the excess business loss rule until 2021. So what that means is for the tax years 2018 through 2020, you can fully utilize your business losses if you've incurred any, and that should help in terms of the amount of tax that you would have to pay in currently. Keep in mind that the 2018 tax returns have all been done and filed already, so there's an opportunity to file amended returns in addition to reconfigure your the losses, if any, for that year and potentially get refunds that way as well. May I have the next slide, please? Okay, there's also a modification to the alternative minimum tax credit. This is a little complicated, and I don't know if this impacts any of you, but I'll just mention it really briefly. The new tax law did eliminate the corporation AMT, which is a parallel tax computation system where you basically have to compute your tax 2 ways, and whichever one is higher is the one that you wind up paying. Sometimes due to depreciation differences or other specific situations, the alternative minimum tax would come into play. If you were in a situation where you were paying the alternative minimum tax, there was an opportunity to get a credit for those taxes paid later on. And the CARES Act accelerates the opportunity to take those credits, where you can take them 2019 instead of having to wait to a later year when certain temporary differences reverse. Again, check with your tax advisor to see if this situation applies to you. May I have the next slide, please? Okay, very quickly also, some of you may have taken out business loans. It's a very common occurrence. And interest on those loans is a deductible tax expense, or it used to be kind of. What the new tax law did is it limited the amount of deduction that you could claim on your tax return for business interest. There didn't used to be any kind of limitation. Whatever the bank said that you paid in interest was an allowable deduction on your tax return. Starting with the 2018 tax year, you were limited to the amount of business interest you could deduct, and it was up to 30% of your overall adjusted taxable income. The CARES Act doesn't get rid of that limitation entirely, but it does increase the limitation from 30% to 50% through 2020. So that's a little something anyway for companies that have been leveraging their businesses with loans or lines of credit. May I have the next slide, please? Oh, this is great. The qualified improvement property. One thing that the CARES Act did was it got rid of basically an inadvertent error in the new tax law that was colloquially known as the retail glitch. And this is it has to do with how you compute depreciation for tax purposes for basically interior improvements to your business. So for some reason, when they wrote the tax law, they wrote it very quickly, very haphazardly. They didn't check and double check before passing it into law. And so a lot of things actually got missed. And one thing they got missed was that qualified improvement property put into service after 2017 was not eligible for accelerated depreciation benefits, whereas other types of fixed assets additions were. You would still have to depreciate for tax purposes on a straight line basis over 40 years, which is kind of ridiculous, because are you even going to be in the same space after 40 years? I mean, I don't know, maybe you are, but I couldn't imagine that would be a reasonable solution. So the CARES Act basically said that any qualified improvements to the interior of your business as leasehold improvements, or if you own your building, interior improvements are now subject to what's called bonus depreciation, which means you can basically deduct the cost of your improvement up to a certain dollar limit upfront in the year that the improvement was placed in service. So a much welcomed and much needed favorable change to the tax law, again, to accelerate deductions and help lower your tax liability. May I have the next slide, please? Okay, so I just want to go through a few additional changes that are impacting individuals and business owners. Okay, recovery rebates for individuals. You've probably heard a lot in the news about this one. This is the $1,200 stimulus payment that has gotten a lot of press. Certainly, I've been hearing about it in the news quite a lot. So each eligible individual is entitled to a $1,200 one-time stimulus payment, $2,400 for married filing jointly, plus $500 in addition per qualified dependent. Keep in mind that the rebate amount does phase out as your adjusted gross income gets above a certain level. So not every American taxpayer is entitled to this stimulus. The dollar amounts are listed here, and I'm not going to just talk about the dollar amounts. I'm not going to waste your time with that. But I think it's completely and totally fair that the stimulus payments are going to the people who can demonstrate they made less than these amounts. So the money is theoretically going to the people who need it the very most. These limits are determined by looking at either your 2019 tax return as filed, or your 2018 tax return as filed, or your 2019 Social Security statements. There are some people who don't even make enough money to have to file a tax return, and those people theoretically were going to be left out if you only look at tax return filings. So this is very fair. One thing that I have seen going is if you use a tax preparer to prepare your 1040s and you used one of those refund anticipation loan programs, you know, some companies do that, like they'll just write you a check for your anticipated refund today and they charge you a little interest, and then when your tax refund is actually processed, you know, you pay back the tax preparer at that time. I have heard reports that the stimulus payments for those taxpayers have gone to the tax preparer and not to the individual. And then you have to hope that the tax preparer is honest enough to give you your stimulus payment. So just keep this in mind if this is impacting you. IRS has also set up somewhere on its website that allows you to track your stimulus payment to see, first of all, if you're entitled to it, and if you haven't received it yet, when you might be receiving it. So may I have the next slide, please? Okay, so special use of retirement funds. I have a couple of slides on early distributions from retirement funds and 401ks and IRAs. Now, typically, you're really not allowed to take out of your retirement account, or except for very specific purposes without being penalized. For example, you can use it to fund your retirement. You can use it to help buy a house. You can use it for certain qualified education expenses, but that's about it. Otherwise, you're stuck with a 10% penalty on early withdrawal from your retirement account. But the CARES Act has suspended that. So there's not going to be a 10% early distribution penalty on payments up to $100,000 from your retirement accounts for certain coronavirus-related purposes. So you can't just take it because there's a crisis happening right now and you'd like to do some retail therapy. That in itself is not going to do it. You also have to repay the plan within 3 years. This is a loan. It's not just a payment or a gift, so to speak. You do have to pay it within 3 years, or you will have to pay tax on that amount over the 3-year period. But the coronavirus distribution is made to an individual who's either been diagnosed with the illness, or someone who is a caregiver for someone who's been diagnosed with the illness, if you have a dependent or a spouse, for example, or if you experience what I'm going to call adverse financial consequences as a result of the crisis. And so you can see here what it says on the slide. It pretty much says it all. May I have the next slide, please? Okay, also, in addition, qualified individuals can borrow up to $100,000 from qualified retirement plans. That would be your 401k or your 403b plan within 180 days of the enactment date of the CARES Act, which takes us into like late September. The definition of qualified individuals is the same as per the coronavirus distribution definition on the last slide. So someone who has gotten sick, someone whose spouse or dependent has gotten sick, or someone who has had some adverse financial consequences as a result of the illness and the ensuing crisis. In addition, there has been a temporary waiver of having to take required minimum distributions for 2020 from defined contribution plans and IRAs. You know, if you have a traditional IRA and you hit age 70 and a half, you have to take a certain amount out of your IRA each year. That's called a required minimum distribution. That requirement has been waived for 2020. There are some people who are in a good enough position where they don't actually need to take the distribution, so this would help them. I mean, some people do rely on this money, and so the distribution does help them. But if it doesn't, then call your plan administrator and make sure that you're getting the distribution that's right for you. In this case, they should be able to help you. May I have the next slide, please? Okay, terrific. There have also been some changes to the charitable deduction rules for 2020 for both individuals and corporations. You probably know this already, but the new tax law also increased the standard deduction for individuals. It pretty much doubled the standard deduction that people could take on their tax returns from previous years, both for single and for married filing jointly taxpayers. And what that means is that many fewer people are now itemizing their tax deductions on their tax returns. And charitable contributions were one of those deductions that you would itemize. One unfortunate fallout from the new tax law is because people were not able to deduct their contributions anymore because they just didn't need it for their taxes. People stopped making contributions to charities in a lot of cases because they didn't need the deduction. So charities are suffering as a result of this. They were relying on getting a certain amount of contributions to make their budget, and then they weren't getting it. Some were doing just fine, but others, were really saw a fall off in their contributions. So what the CARES Act has done is it's given people an additional $300 deduction on their 2020 tax returns for qualified contributions that are made in 2020, in addition to the standard deduction of like $24,000 for married filing joint or whatever it is. So that's kind of nice. You should have to be able to demonstrate that you've actually made these contributions. Don't just automatically deduct $300 on your tax return if you haven't made the contributions, because that's dishonest. But if you've made contributions to qualified charities and can demonstrate that you've done so, either through, a written acknowledgement, the charity is supposed to give you a written acknowledgement if you give at least $250, or you just keep, write your own receipt somewhere. I gave $10 to the Red Cross or whatever. That should do. Now, these are contributions that are made to qualified public charities, not to private foundations, and not to donor-advised funds. That's like your Fidelity Charitable and such. So just keep that in mind, please. In addition, the charitable deduction limit for individuals had always been 50%. The new tax law made it 60%. So for some people who are particularly philanthropic in their giving endeavors, they could take a bigger deduction on their tax return should they itemize. Now that limit has been suspended. So theoretically, you can deduct up to 100% on your individual tax returns if you are so inclined and able to give to charity at that level. May I have the next slide, please? In addition, corporations have always been limited in the amount of charitable contributions that they can deduct on their tax returns. Before and also after the 2017 tax law change, you could only deduct up to 10% of your adjusted taxable income for charitable contributions. And then if you gave more, you would carry it forward for 5 years and it would expire. This CARES Act has increased the allowable deduction from 10% to 25%. So if you're able to make some charitable contributions in your business during 2020 and you are profitable in your business, then you get a higher deduction this year for the charitable contribution component. So that's kind of nice. That's a nice give by Congress. In addition, there has also been an increase in the restricted limit for the deduction of certain qualified food inventory from any trade or business. It used to be 15% of taxable income. Now it's 25% of taxable income. It also applies not just to incorporated businesses, but also for self-employed individuals who are donating food inventory from their own trade or business. May I have the next slide, please? Okay, so we talked a little bit about the excess business loss limitation earlier when talking about corporations. This is also something that, non-corporate business entities. This also applies to individuals who are self-employed and have their own business. The limitation on the deduction for excess business losses, the new tax law made it $250,000. Now it is zero, at least through 2020, so that's nice. You can file amended tax returns for 2018 and 2019 if you've already filed them and show that excess business loss limitation of $250,000. You can actually show your full business loss and potentially get a refund as a result. And so this loss limitation rule will actually apply to individuals, and then there are also situations where perhaps an estate might have to amend a return, and then also there are certain complex trusts with business activities, and this loss limitation suspension applies to them as well. May I have the next slide, please? Okay, you know what? This is a slide that's a duplicate of another slide that I already presented. Sorry about that. So may I have the next slide, please? Okay, so this is kind of a nice give also that the CARES Act presents as for some employers will help pay tuition assistance for its employees, or it might also help pay back student loans that their employees have incurred for for learning the trade or business. And that income used to be taxable to the recipient of the payment from the employer. What the CARES Act does is it says that if an employer pays back the student loan or gives tuition assistance up to $5,250, then that income is excluded from taxable income for 2020. So that's actually very nice. That's also a nice give. It encourages employers to encourage their employees to better themselves, to continue their schooling, to help with their schooling, and help grow the business, grow themselves professionally. And that's an activity that is generally encouraged in the business world, because it helps the businesses move forward, helps with succession plans, and all kinds of good planning stuff. So this is a little help in that direction. Any kind of income that is excluded from tax is a nice thing. And $5,250, I mean, I don't know about you, but I think that's kind of a lot of money for me personally. So that would be nice in that situation to get that money tax-free. So this is another, I don't know if this is something that you do in your businesses, but this is just a little nice thing to be aware of for this year. May I have the next slide, please? How am I doing on time, Amy? Amy? Okay, may I have the next slide, please? Okay, so I just want to talk a little bit. I know that the organization did a presentation earlier on the Small Business Association loan packages that are available due to the crisis, but I just want to mention them briefly to kind of keep them on your radar. There are actually 3 programs that were put in place due to the CARES Act that are loans, favorable loans for businesses that have been impacted by the crisis. There's the Economic Injury and Disaster Loan Program, colloquially known as EIDL. That is a program that the Small Business Administration already had in place but expanded under the CARES Act. There's the Paycheck Protection Program, third-party loans through the Small Business Organization, and then also the Main Street Lending Program for larger employers. Now, the Paycheck Protection Program in particular got a lot of press when it first came out. You know, in the beginning of April was loan day when everybody wanted to get in their application to get what they were thinking of as free money because it is a forgivable program. It was supposed to be open through June 30th, but the available funds for lending ran out within the week. So a lot of people got frustrated and discouraged, and there was some bad press that came out about that. A couple of weeks ago, Congress approved an additional $310 billion in funding for the Paycheck Protection Program and some additional billions of dollars for the EIDL program and also emergency grants. So they're really trying to make sure that the businesses who need this money are able to apply for and get this money should they be qualified. And, you know, the lenders for a while were going crazy with all these applications coming in all at once. People were told to get in line, first in, first out for processing applications. Lenders were doing their very best to process the applications as expeditiously as possible while trying to watch out for things like people taking unfair advantage. May I have the next slide, please? So the EIDL program is for smaller businesses with 500 or fewer employees or with average annual gross receipts of less than $7.5 million. That would be most businesses in the United States that theoretically are eligible for this and that are unable to meet existing financial obligations due to the crisis. The amount was up to $2 million, depending on your actual economic injury. This is not a forgivable loan, and the interest rate, I believe, was set at 3.75% for taxable businesses, 2.75% for nonprofits. The real carrot for the EIDL program is inherent in this. When you make your application, you're also eligible for a $10,000 emergency grant. So that's a $10,000 disbursement that was supposed to have been given within 3 days of making your application. And that $10,000 was a grant, not a loan. You wouldn't have to pay it back. And even if the loan was not approved ultimately, you could still keep the $10,000 emergency grant. So that sounds like free money to me. And I know that a lot of businesses were encouraging to try to apply for this loan, if anything, because $10,000 is money, and that's good money to businesses who could use it to help fund operations where things have been unexpectedly and quickly, suspended through no fault of their own. Applications are made through the Small Business Association, and there's a link to the line on this slide here. May I have the next slide, please? Okay, Paycheck Protection Program. This is the this is the king and the queen and the baby of the CARES Act. This is the one that's been getting all of the press because this is a forgivable loan program for certain small businesses of certain size or who are who have different locations, who have fewer than a certain number of employees. The criteria are fairly expansive as to who might qualify for this program, and it's based on the amount of the loan that you are theoretically eligible for is based on a certain percentage of your monthly payroll cost. I think it's 2.5 times a borrower's monthly payroll cost for U.S. employees. It's a 1% loan rate, and there's an also opportunity, if you meet certain criteria, to have this loan forgiven such that it converts into a grant rather than a loan, and it's also a tax-free grant, which is really nice. I mean, typically when you have forgiveness of debt, the amount of the forgiveness of debt is treated as taxable income, but in this case, it would not be due to the provisions in the CARES Act. That is why it got so much press. That is why there was so much demand for it, and that is probably why the initial funding ran out so quickly for this program, because it's a really, really good deal. You do have to attest in your application that you're going to be using these funds for coronavirus-related purposes, and that you're not just applying because you're you and there happens to be a crisis going on. You have to demonstrate that you're applying for these funds in good faith and that you actually do need them. Now, I am not a lender and I'm not an attorney, and so I cannot opine on your specific eligibility for this program. So if you have applied for it and you've gotten the funding, that is fantastic. Congratulations. If you're still considering whether to apply for this program, please do check with your lender and your lawyer to make sure, first of all, that you are eligible and how much you would be eligible for, and what are your opportunities to have these monies forgiven such that they become a tax-free grant. May I have the next slide, please? Okay, so this is a nice little flow chart that my team put together as to whether your business might be eligible for a Paycheck Protection Program loan. It's pretty straightforward, but I think it sums it up rather well as to whether you should even bother putting in the time, because the loan, I'm told the loan application itself is kind of cumbersome. So take it from this. May I have the next slide, please? So this slide just lists the conditions under which the loans under Paycheck Protection Program can be forgiven. The funds have to be used in an 8-week period for payroll costs or interest costs on certain mortgage payments, or rent, occupancy costs, or certain utilities and overhead costs. You also have to be able to demonstrate that your existing employees are being kept on staff and that you're continuing to pay them at the same level. In addition, we mentioned this earlier, that there are certain other programs from the CARES Act that interface with the Paycheck Protection Program, such as the Employee Retention Program and the ability to pay the Social Security tax in 2021 and 2022, basically pay later. In addition, the $10,000 emergency grant from the EIDL loan could also be affected if you're having a Paycheck Protection loan forgiven. So again, please do check with your lender to make sure that you're using the programs to the best of your ability without double dipping, without inadvertently running afoul of some regulation. There's a lot of them. They're brand new. We're all learning all about them, and we're just really, everybody's just trying to do their best here. May I have the next slide, please? Okay, so real quickly, I just want to talk about the Main Street Lending Program, which is a funding program for businesses that are just too big to use the Paycheck Protection Program or the EIDL program. I'm not going to spend a lot of time on this. This is a program that when it was first introduced in the CARES Act, the CARES Act basically said there's going to be a Main Street Lending Program for employers of up to 10,000 employees, but we're going to provide some additional guidance on that later. At the end of April, some additional guidance was given, and they're summed up pretty well in the next couple of slides. So may I have the next slide, please? So this slide here basically just gives the sample facilities and terms. Should your business be too large for Paycheck Protection Program or EIDL, or you otherwise somehow fall out of the lending criteria for those programs, this will help you determine whether you might be eligible for a loan under the Main Street Lending Program. And there's also now been funding approved for this program as well. May I have the next slide, please? Okay, so this this slide just talks about some of the fine print relative to the Main Street Lending Program. I should say that charitable organizations, tax exempt, charities, business leagues, social welfare organizations are not eligible for the Main Street Lending Program, even though there are some of those organizations that have been affected by the crisis and that could benefit from a program like that. What Congress has said is that they're working on a parallel program to the Main Street Lending Program that would affect those kinds of taxpayers. So if you are a larger exempt organization, just stay tuned. Presumably something is coming down the pike for you. And as far as I know, maybe something has already been released in the hour that we've been talking here. I mean, who knows? There seems to be new guidance coming out on this thing all the time. And it's a little hard to keep up, but we just do our best. May I have the next slide, please? Okay, so just some additional guidance here on the certifications that are required for the Main Street Lending Program. Again, please do check with your lender and your attorney if you think that one of these loans might apply to you. May I have the next slide, please? And may I have the next slide, please? I don't mean to just go by the slide that says questions and answers, but this is a slide that I'm required to show just by my company. If anybody has any questions on the information I've presented here, I would be happy to take them at this time. If questions come up later, I would be happy to take them later. But here is some contact information here on this slide. My personal contact information is on the cover slide to this presentation. Does anybody have any questions at this time? I know we've covered a lot, and a lot of it is brand new and fairly technical in nature. But what I'm hoping is that you all will be able to take away something that might either be able to help you personally during this time or help your business or both.
Lisa, thank you so much.
You're welcome.
Extremely helpful information. Yeah, that was great. At the moment, I don't see any questions that came in. However, I want to reiterate what you just told everybody, that we are happy to get this presentation, the PowerPoint, out to anybody who would like it. They can contact Lisa or NALP. We also will have the recording for this webinar and the PowerPoint available up on our website at landscapeprofessionals.org. And again, thank you, Lisa, so much for your time today. You provided a lot of very helpful information for everyone listening.
Thanks, Amy. Thanks, everyone. Does anybody have any questions at this time?
I don't see any coming in at the moment, Lisa.
Okay.
But
I'm around.
We'll go ahead. That sounds perfect. We will go ahead and make sure to get those straight to you. And again, Lisa's contact information, everybody, is up. We also, at the end of the presentation, we have some links to different resources up on our website as well. Oh, Lisa, are you still there by any chance?
Yes, I am.
Okay, we do have a question that just came in. Is there any concern that we will need to prove that we couldn't get financing on our own rather than doing the PPP?
That is an excellent question. And while I'm not a lender, I would say that when you apply for a PPP funding, you do have to certify that you actually do need this funding for coronavirus reasons. Your lender will be able to tell you better what you need to prove, what you need to present to demonstrate eligibility. I don't know whether you have to prove that you couldn't get another loan. That would be a question for them, but I think that's a very good question.
Okay, thank you, Lisa. We do have a few more minutes. I'll wait one more minute in case somebody else, it's very easy to think of something after the fact.
Of course. So either I just covered everything and any questions that people had, I answered for them, or it was just like all too much and people are, I've lost you all,
well,
which I hope wasn't the case.
No, your PowerPoint is so chock full of all the information. I think that is also just such a wonderful resource that you're providing, and everybody is aware that they can get this, the PowerPoint. So thank you again for that, Lisa. That's a great.
Thank you. If you go to our website, which is on the second to last slide here, rsmus GMT20200513.com. Right at the top of the web page there is our own Coronavirus Resource Center, in addition to NALP's Coronavirus Resource Center, where there's a plethora of information on funding, on tax advice, on liquidity advice, on business planning advice. So I would like to believe that between RSM and NALP, we've got you covered, at least preliminarily, with information you might need during this really special time.
Agree. And we have one more question that came in, so I'm going to go ahead and take that question, and then we'll close out. The question, Lisa, is, if landscaping was considered an essential business and work continued, does this jeopardize the forgiveness of the PPP?
Again, that is a question for the lender as to whether you will be able to whether you'll be able to have to just pay back the loan or have it forgiven. I'm not entirely sure. I mean, I guess it just depends on where you are and how you have to conduct your business. It really depends on your full-time equivalent employees, and it's a lot more complicated than I can just tell you over the phone with like 2 facts. But I think that's a very, very good question to flesh out.
Understandable. And I want to point out to everyone, if they do go to the NALP, the COVID resources page, we have a lot of questions and answers that have come in for the past month or so that may cover some of this. So that's
I mean, I can tell you that my own landscaping business are probably the only ones who've been able to continue unfettered, which is great, you know.
Interesting. Yeah.
But I also don't know what goes on behind the scenes over there, in terms of, you know, if there are difficulties that I personally don't know about beyond just getting my own lawn cut.
Correct. Well, you certainly gave everyone enough information to digest now, and helpful and incredible. So Lisa, thank you. We appreciate your time with us. And I want to thank everybody today for listening, and just hope that everybody stays safe and enjoys the rest of their day.
Thanks, everyone. Stay safe and healthy. Stay sane.
Take care. Bye.
Okay, bye-bye.